Hello everyone, how are you? I hope people can hear my voice clearly. Now today we have a very important section, and that section is performance measurement. And performance measurement is the most important area of your examination. Before I proceed, a quick confirmation. Can people hear my voice very clearly? Yes, please. Can people hear my voice clearly? So please quickly confirm. Okay, that's good. So today it's $1 million day. Why I'm saying $1 million day? Because many people struggle in performance measurement. And today, by the end of the session, I really want your feedbacks in relation to how helpful the today's session will be for you people and how things will become easy. So there are 12 things to cover, $12 million points, 4 for financial and non-financial, which includes the models as well, 5 for ROI, and 3 for transfer pricing. So the entire section will be discussed in 12 points. And through these 12 points, I will try my best to make this entire section easy for you. So guys, are you ready for today's session? And are you ready to understand 12 points of $1 million? And this will, I hope, this will make your life very, very much easier. Make sure you do give me feedbacks by the end of the today's session and stay connected till the last minute of today's session. Don't leave, okay? Stay connected because usually what I've seen before that after last 15-20 minutes, people start going. So that's wrong. You are missing important things. So make sure you are with me till the end and do join the WhatsApp group. The link has been shared in your chat box. You can see the chat box, you can see the WhatsApp group. So just click that link and you become part of that group. So let's start with the very important section, performance measurement. Now, there's one term known as critical success factors. We call these as CSFs. These basically are the key areas in which a business should win. So if the business needs to be successful, business needs to ensure that they uh, do achieve critical success factors, they do achieve CSFs. So critical success factors are the most important area. For example, let me just give you a few examples like efficient production. Now, efficient production is a CSF for a manufacturing company because they would want to make sure efficient production. Second, we have customer satisfaction. So customer satisfaction is another critical success factor, and this is in fact for all the businesses, for all types of businesses, this is a very important critical success factor. uh, we can think about some kind of an education. So success rate. So success will be a critical success factor for any education institution. Same, we have high quality for any company that wants to pursue the quality objectives. So high quality. So these are critical success factors. These are the areas where a business should win. Now, KPIs, key performance indicators, we call these KPIs. These KPIs these basically check whether the company is achieving its CSFs or not. So if you want to check whether your critical success factor of high quality, efficient production, customer satisfaction are being achieved or not, So to check that, you should identify key performance indicators known as KPIs. Now these KPIs uh, will be financial KPIs as well. So we can call these financial KPIs, financial performance indicators, and these can be non-financial performance indicators, which means non-financial KPIs. Okay, so it's very important that you just keep in your mind that these KPIs needs to be financial as well as non-financial. You need to strike a balance. So mainly these KPIs are represented in terms of percentage, like percentage gross profit margin, like percentage sales growth. So we represent these KPIs in terms of percentage, like percentage repeat customers, like percentage of complaints. So whether it's financial, whether it's non-financial, we represent these in terms of percentage. A high ratio of KPI is presented in terms of percentage of something. So this is represented in terms of percentage very commonly. Plus, we also represent them as number of something. Number of something, for example, I would say number of repeat customers. So number of repeat customer is again what you call a KPI, and then this is a non-financial KPI. So we represent these KPIs in terms of percentage, in terms of number of something. Mainly, you have to keep in your mind that financial KPIs are mainly represented in terms of percentage, whereas non-financials are represented both in terms of percentage and in terms of number of something. So you can represent non-financial as percentage of something as well. For example, a percentage repeat orders. Now repeat order is a non-financial KPI, and this is in terms of percentage, whereas you can also represent in terms of number of repeat customers. So mainly financial KPIs are in terms of percentage, and non-financial are represented both in terms of percentage and number of something. And these KPIs are the one that check whether CSF's critical success factors have been achieved or not. Now quickly, if I want to ask a few questions from you people, so you need to answer me. Just tell me, for a restaurant, I'm just making sure that you do understand what I'm saying. For a restaurant, what do you think, what will be the success factor of any restaurant? Success factor means critical success factor. So for any restaurant, the CSF would be quality. Yes, this is a CSF quality for a restaurant. Plus customer satisfaction. Yes. Plus for a restaurant, you can say hygienic conditions. Hygienic conditions could be a CSF for a restaurant. Okay. So critical success factors are very easy to figure out. Yes, now Francisco, number of customer repeating is not a CSF, it's a KPI. As I just mentioned, that KPIs are represented in terms of percentage or number of something, so it's not a CSF, it's a KPI. So ambience here, ambience is a CSF for a restaurant. Now quickly tell me any CSFs for any institution, for any tuition provider, for any school, for example. So any good success indicators you think will be for school? So for school, we can say if good faculty, highly trained faculty. Yes, success of students, success of the students. Yes, punctuality. Yes, punctuality. So see, I hope you are understanding. If you think about any business, so you just ask yourself, what are the key things for this business? What are the key things for this business? So once you understand the key things of that business, so those are known as critical success factor. And then afterwards, you think that how we will check whether these key things are being achieved or not. How we will check whether these key things will be achieved or not. So to check that, you find out the KPIs, which can be financial KPIs as well and non-financial KPIs as well. And as I mentioned, if it is financial, so mainly that will be represented in terms of percentage. And if it is non-financial, so you can represent non-financial both in terms of percentage or number of something. So we'll discuss this later on. Now, I'm starting first with the financial KPIs. So financial KPIs, we have a very common group of ratios. So I will just quickly skim through these ratios, just will give you a basic understanding, because I don't want to waste time on these basic ratios which you already know. So ROCE, you can see the formula of all the ratios. ROC basically represents how much profit before interest and tax the company has earned by using its capital employed. So how much profit the company's capital employed has earned for the company. Asset turnover represents that how many times, you represent this in times, how many times the capital employed has generated the sales, how many times. So the more the times it has generated the sales, it is good for the company. When coming towards the three profit margins, so gross profit margin is what? Gross profit margin represents percentage gross profit of sales. It operating profit margin represents how much percentage operating profit of the sales, and net profit represent how much percent net profit is of the sale. So these are the three profits that you already know. It represents how much profit the company has earned over its sales. So this is the profit margin, gross profit, operating profit, and net profit. Now operating profit is also known as PBIT, profit before interest and tax. Then we have another very famous group of liquidity ratios, and that is current ratio, asset test ratio, inventory days, receivable days, and payable days. So they all represents uh, operating profit is PBIT. From PBIT, Abdulaziz, when we deduct interest and tax, so then we come at net profit. Okay. So liquidity ratios, we have current ratio that represents how much current assets company has in order to pay off its liabilities. So this is current ratio, and the ideal is 2:1, which means you should have 2 rupees in order to pay off 1 rupee liability. Then you have asset test ratio. Asset test ratio basically is a one in which you deduct the stock, and you see other than stock how much current asset does the company has in order to pay out their liabilities. So other than stock, how much the company has current asset in order to pay out its liability. So the ideal is 1:1, which means you should have 1 rupee of current asset other than stock to pay out your liabilities. Yes, Cherry, you are right. No, for asset test ratio, we have a name, and that is quick ratio. Quick ratio. Inventory days represents how many days company takes to sell off its inventory. So it represents inventory days. Yeah, overdraft is included in current liability. Receivable days indicate how many days the company takes to, sorry, how many days the company's customer takes to pay the company, how many days the company receivables are being cleared, and payable days indicate how many days the company takes to pay their suppliers, to pay their creditors. So this represents payable days. Then we have another group of risk related ratios known as financial gearing, operational gearing, and interest cover. So let me quickly tell you, financial gearing basically measures the burden of debt. It measures the burden of debt, that is how much percentage of debt the company is using for its business. So it represents the burden of debt on the company. So this is financial gearing. So you can see there are two formulas here. Both are useful formulas. Whatever is given in the question, you can use that. So first formula is debt divided by debt plus equity. Yes, we also call this gearing ratio, debt divided by debt plus equity. So if I just give you a quick understanding of this, so it's very simple. If your debt is 50, so in denominator we'll write here 50 again, and your equity is also 50. So the answer that you will get here will be 50%. 50%. So the answer is 50%, and this 50% means that in the total business funds, in the total business funds, 50% is debt. Okay, in the total business funds, that is uh, equity plus debt. In equity plus debt, 50% is debt. Okay, so the total funds includes 50% of debt. Second formula, if I use the same numbers, debt is 50 and equity is 50. So the answer that you will get here is 100%. And this answer means that in relation to equity, debt is 100%. In relation to equity, debt is 100%. So if equity is 50, so the 100% of that will be debt, and that is also 50. So to summarize, first formula tells you in total funds, debt plus equity, how much is debt in total funds, and the second formula tells you in relation to equity, how much percent is debt. Then we have operational gearing. Operational gearing indicates the burden of fixed cost on the company. Fixed cost is definitely a burden for the company. Higher fixed cost is always dangerous for the company. So you can measure this through fixed cost divided by total cost, and it tells you how much percentage of fixed cost is in the company. It's up to you. It is normally given in the paper which formula you have to use, and examiner does mention the name of this formula. The name of this formula that is usually used in the paper is debt to equity ratio. So mainly the formula that is used in the exam is debt to equity ratio, but examiner does mention the name of this, so through this you can figure out. Otherwise, even examiner might ask you to solve through this. Okay. Interest cover. Interest cover indicates no, formulas are not given in the paper. Interest cover indicates that how many times the profit before interest and tax can pay out the finance cost. How many times? So the answer is in time. So it represents how many times the PBIT can pay out the finance cost. So actually, in reality, we have to pay only one time, but it actually indicates how healthy the profits are, how healthy the company's PBIT is. So it gives you the idea that how healthy the PBIT is. So the more the times the answer is, the more healthy the profits will be. So it indicates that uh, how much times PBIT can pay off its finance cost. Okay. Operational gearing is in terms of percentage, financial gearing is in terms of percentage, and this is in terms of times. So now if you just observe here, so what I have discussed up till now is that I've discussed about the financial ratios, and really truly speaking, if you just take out the performance management history of past papers, so since 2007, uh, I haven't seen any past paper question where balance sheet came in the paper. So this is really, really strange that since 2007, you can't see any question in which you see there is a balance sheet in section C or a long question given, which means if there is no balance sheet, this means so many ratios are not possible to work out, like ROS is not possible to work out, asset turnover not possible to work out. Yes, these are one you can work out because profit and loss statement is given in all the questions. When coming towards liquidity ratio, so you cannot work out current ratio, asset test ratio, inventory days, receivable days, payable days. So many ratios will be one that will not be workable. You can even not work out financial gearing, but yes, you can work out operational gearing and interest cover. So this means if we just consider from 2007, balance sheet hasn't been tested, which means you just have to restrict yourself towards the P&L ratio. Okay, P&L ratio, profit and loss statement ratios. Okay, so having said that, we have covered the financial aspects. Now I'm moving towards a model that is known as balance scorecard. So if it is tested this time, Zohib, then you know the formulas. Simple. Okay, so balance scorecard is a model that basically focuses on both financials and non-financial, and it says that company needs to consider two things, that is financial and non-financial, so it should take a balanced view. Now this scorecard is a one that says there are four perspectives, and those four perspectives are a one that are connected with the company's vision. So in order to achieve the company's vision, it is really important that one should focus on these four perspective. So what is a vision? Vision means the preferred picture, how you think future will look like. So it's a vision. So to achieve the vision, it says there are four perspectives that the company should focus on. And let me just tell you, balanced scorecard is a model that have been introduced by two doctors, Dr. Kaplan and Dr. Norton. And what they did a research, and in that research, they've used the successful companies, and they saw why successful companies were successful. And they figured out that the successful companies were successful because their focus was on four perspectives, and those four perspectives are financial perspective, customer perspective, internal perspective, and innovation and learning. So they think that any company that focuses on four perspective will be a successful company, and plus the company will automatically take view of financials as well as non-financial, so it will not be just a one way exercise of financials. Now the first perspective basically focuses on shareholder value creation. It says that company should see whether it has created the shareholder value, and for that company can use financial performance indicators, financial KPIs, as you just saw before, a huge list of that, like percentage ROAS, asset turnover in times, current ratio, profit growth. So these are just financial performance indicators. So for financial perspective, you can use that long list of financial performance indicators. It says that another important perspective is customer. You need to ensure that your customer is happy, his customer is satisfied. So for customer satisfaction, it says that you should have indicators, and now when you focus on that customer perspective, then your focus shifts towards non-financials, and these are known as non-financial performance indicators, which we call NFPIs, or I can say non-financial key performance indicators as well. Like for example, as I initially mentioned at the start of the session, that your FPIs or NFPIs are represented in terms of percentage, and you can even represent your NFPIs in terms of number of something as well. So you can see percentage sales return. Now this is something which is not financial based, it's a non-financial indicator. Percentage of sales return, percentage of claims made, these are all a one that indicates customer satisfaction. Then you can see number of, as I mentioned initially, number of. So number of repeat customers, yes, is a key thing. The more the customer comes again, which means they are satisfied. The less the sales return, this means they are satisfied. The less the claims made, this means they are satisfied. Plus you have percentage of on time delivery. If you deliver them on time, so this means they are satisfied. So according to balance scorecard, this second perspective is a one that actually test whether the company is successful in satisfying their customers. And to check this, you have mainly non-financial key performance indicators. Then it says that the business internal efficiency, the business internal productivity is key. It says that the business internal processes should be efficient, should be productive, should be fast, because if the internal processes will be fast, then the company will be a successful company. So it says that the more the internal perspective is good, the processes are good, the company will be able to satisfy its customers timely. And once they satisfy their customers timely, this means in turn they will satisfy their shareholders. So how to check whether the efficiency of the internal business is good or not? Again, we can see a list of key performance indicators, and yes, right now I can see another long list of non-financial performance indicators, like percentage of internal rejections. The more the rejections, the more the process is getting slower. Percentage error rates, the more the error rates, the more the process is going slower. Percentage employee retention rate, which means the more you are able to, the more you're able to retain your employees, the more smoother the process will be. Percentage downtime, this is mainly useful for some internet business or for some business that relies on internet, like website has gone down. So percentage system downtime again indicates how quick the process is. If the website has gone down, which means internal perspective is not good. Again, you have average completion time per job, indicates how quickly are we able to complete the job, and this indicates our internal speed and efficiency. So again, the main focus here is towards non-financials, which are represented in terms of percentage or number of something. Then it says that the fourth key perspective for a business is innovation and learning, and it says that every business, in order to be successful, needs to ensure that they are developing themselves for the future, and such a development includes two things, that is their product development as well as their employee development. This means they need to develop new products as well, and they need to develop the skills of their employees. So both of the things come under innovation and learning. So friends, again there are indicators, as I mentioned, that you can use financial indicators in customer perspective, internal perspective, innovation and learning you can use, but normally we focus more towards non-financial indicators in these areas. So we have indicators like, for example, you can see uh, number one, number of number of new products developed. So if you develop more new products, this means you are creating, sorry, this means you are improving yourself, and you are planning for a better future. Same, percentage of successful products. Now this is more powerful indicator, this is more powerful non financial performance indicator. This is also non-financial performance indicator, but this is more powerful because it is giving you the idea of the success, that how much successful the products are. Then you have percentage of income from new products. Now this is a financial KPI. Okay, this is a financial performance indicator, but yes, it's something that you can use. You can even use financial here in all these perspective as well, but mainly we use non-financials here. Another indicator we have is time from identifying a new product area to its market launch, and this is indicating the time, and time could be indicated in terms of, for example, days, or maybe for example months. So this is a very good indicator as well, as it indicates how many days a company takes from identifying the idea and to its market launch. So this indicates the company's efficiency of innovation. Now, balance scorecard, if you want to assess the performance of a company using balance scorecard, so automatically your focus will be towards both financial and non-financial indicators. Yes, this is true that in case of financial perspective, our main focus is towards financial performance indicators, and in terms of customers and internal perspective and innovation and learning, our focus is towards more non-financial performance indicators. But remember, whenever you are representing or calculating any non-financial performance indicator, so your answer should be in terms of percentage, or like this, number of something. Okay, so normally we represent NFPIs in such a way. So I hope you understood the basic idea, how actually we represent financial KPIs and non-financial KPIs and what a scorecard actually is. Now, before moving towards building block model, I want to move towards a past paper question. And yes, today's class is about $12 million points. Everyone, are you listening me? It's about $12 million points. And at the end of the today's session, do let me know how useful the today's session went for you people. So when we are starting with the past paper question of financial and non-financial, so let me just first show you the question, and then we'll come back and see what $1 million points are and how they will actually help us. So a question of financial non-financial would come most probably on a word processing sheet, where you need to draft the entire answer, we need to draft the theory, where you need to work out the ratio. So I'll tell you how to manage such a question on this word processing sheet. But before that, I'm moving towards my own area of working. But yes, first let's have a look. So this is the question that we are right now targeting. So let's do one thing. Let's first read the question, and then let's move towards the area where we can see how we can use the $1 million points. And yes, please, will you provide me a good feedback at the end of the today's session? Guys, tell me yes or no. Okay, so do give me the feedback. You are communicating with the teacher right now, Munira Zafar. Asfar, I can see your comment here. You have to write here in the chat box. So let's read the question. Now, first thing I need to tell you, if you want successfully to solve a complete question of financial and non-financial, so my first advice is that you have to read the scenario very thoroughly and carefully, otherwise you cannot. So let's see what the requirement is. It says discuss the financial and non-financial performance of Jungle Company for the year ended 31st August 2016. Note, there are 7 marks available for calculations and 13 marks available for discussion. So this is a core area of discussion. Now, friends, moving towards the verb and the object. As you all know, I always split this into verb and object. So the verb is discuss, and what to discuss is your object, and this is your object. So we are provided with very less non-financial data, as you can see here, along with a huge financial data. So there are certain things that I want you people to note down here while reading the scenario. What are the key things that one should mark? What are the key things that one should find, especially for questions of financial and non-financial? Let's start. Jungle Company is a very successful multinational retail company. Retail company. It has been selling a large range of household and electronic goods for some year. Okay, now now the first thing I, I want that you people should always find out is the nature of the business. What actually the nature of the business is, which is right now a retail business, and they are a retail business, and they sell electronic goods and household. So the first thing that is, find out the nature of the business. Second, 1 year ago it began using new suppliers from the country of Slovak, where labor is very cheap for many of its household goods. Secondly, I want you people to highlight any important observation or the changes that the company has conducted or company plans to conduct. I'm telling you, I'm making this very easy for you, and you yourself will give me a feedback very quickly right now after the question that, sir, this is a wow factor that I'm telling you, and this will make your life really, really easy. So please do give me your feedback, and do give feedback to ACCA as well. So this is a change, and for me this is a very important change, that they are purchasing from another country, and the major reason what I think is it's because of the cheap. So this is a change that you have to see that company has done. So this change should be highlighted, because what I've seen that many of our students, what they do, they highlight the entire scenario, and they themselves forget afterwards that what are the important things. Okay, so just highlight things that I'm mentioning here. Then it says in 20x4, Jungle also became a major provider of cloud computing services, investing heavily in cloud technology. So now this is another important thing. So and this is something that is important, that it is a service business as well. So it's first a trading business. First it was a trading business where it was trading the products of household and electric goods, and now it's a service business as well. So this is important to figure out. This service provides customer with a way of storing and accessing data and programs over the internet rather than on their computer hard drives. All Jungle customers have the option to sign up for the company's gold membership service, which provides next day delivery on all orders. Now this is another key change, I would say, or a key information that one should highlight, that those who sign up with this service, they get the delivery next day in return for an annual fee of $40. So this is another important observation and change. In September 20x5, Jungle formed its own logistic company. Now this is another change. Are you seeing what I wanted to tell you? So you can see this is a change. Own logistic company and took over the delivery of all its parcel instead of using Abid, this class and webinar is for F5, so please just use this for F5. It's not for F9. F9 has its own different methodology. Okay, so sometimes if I get time, I'll discuss F9 as well. Instead of using services of international delivery companies. So yes, this is an important change. Over the last year, there has been worldwide growth in electronic goods market of 20%. Now, the third thing I want to tell you, just underline all the important amounts given in the question, amounts and the percentages. This is a very easy point. I will make this really peanut for you. I'm sure you will like my strategy. So do underline anything that is of percentage or an amount. So this is an amount, and this says that worldwide electronic goods market have enhanced by 20%. Average growth rates and gross profit margins for cloud computing service providers have been. So this is 50%, which is growth rate for cloud computing market, and 20% is the average gross profit margin of cloud computing businesses. So these are the percentages one should highlight. So amount and percentage should be highlighted respective in the last year. Jungle company prices have remained stable year on year for all sector of its businesses. So make sure you do highlight one more thing, and that is, I don't have a space here, let me write here, any price information that is given, it's really crucial to highlight price information, because this gives us the idea whether the company has changed its price or company intends to change its price in the future or not. So that has remained stable. When the price remains stable, listen friends, when the price remains stable and the company's sales increases, when the company's sales increases but price remains stable, this means the entire reason for the increase is the volume. Okay, so this gives you a very good information that if the price hasn't changed and the sales has increased, so definitely the reason is that company uh, company has increased its volume. Okay, so this gives a very good information about the volume. So I hope you understood what I meant here. Now let's close. While reading the scenario of financial non-financial indicators, four things are one that one should mark: nature of the business, this nature of the business, any important changes that company has done or plans to do, any amount or percentages given, and the price information. If you do underline these four things, definitely these four will be a one that will give you lot of information while drafting your answer. Okay, and I'll show you how I will use this. So we have 20 x6 20x5 data, and we are provided with 2 years data just because we need to compare that and comparison is important, because without comparison you cannot conclude on things. So you have our revenue, cost of sale, GP, admin, distribution, other operating expense, and net profit information. Mind you, there's no balance sheet given here, as I mentioned. Okay, we have a breakup of revenue here. We do have a breakup of cost of sales here. So we do have a note for admin which says included in the administration expenses are the cost of running customer service department, and the amount of that customer service department is 860 and 1900 for 20x5 and 20x6 respectively, and this department deals with customer complaints. Okay, so if you see, if you are imaginative enough, so you can really figure out that customer complaints is more like a non-financial area. And yes, the question is giving you a hint that admin cost includes something that relates to non-financial area. Are you getting my point? Understand? The admin expenses is indicating something that is non-financial. Then we have non-financial data. So it was not far away. We can quickly see here percentage of orders delivered on time, number of customers complaints, as I mentioned, number of customers, percentage of late gold number deliveries. So mind you, this is already in terms of percentage. So things, when things of non-financial are on already in terms of percentage, so yes, you can use them directly as percentages. But something like these, when they are given in number of something less, you can see, so you can play with these things more compared to these percentages. So you can play with these things, and through these you can even make another new indicator, especially when things are given in terms of the absolute amount or the number of something. Okay, now I just want to move towards the $1 million technique. Let's see what are we supposed to do. First of all, it says for both financial and non-financial, calculate ratios. Calculate ratios. Now, as I mentioned, that mostly you are not provided with balance sheet, and when I see P&L, so I am left with very less options. If I just go back to the question very quickly, so I can show you that having said that you have P&L here, so by looking at the numbers in the P&L, very less ratios are workable here. If I just recall the list that I discussed today, so using that list, I can just work out GP, margin, that is gross profit margin, and not profit margin, and nothing else. So how I'll be able to assess the performance for 20 marks if I can just work out two things from the profit and loss statement? So here the students get stuck. So I'm giving you a very important tool, and do use my gift. This is a gift for you people. This is a gift that I'm giving you people, and that gift is whenever information like this is presented, and mainly it is how the information is presented, and you can just work out very few indicators from the list. So what you do, you work out two very important things, that is percentage of sales growth. Always work out percentage of sales growth and of no percentage change in cost. So remember, these are the two that you should work out every time, and this gives you a very good idea. Just forget about everything. What I'm telling, just listen. Percentage sales growth and percentage change in cost, you should work out. Okay, so how you work out any sort of a percentage change? So it's very simple. You use the current year figure of that thing, you deduct that from the previous year figure, and you divide that with the previous year figure, and you can get the percentage change. So any percentages that you need to work out, you use current year figure minus previous year figure divided previous year figure, so you'll work out the percentage change. So if I apply this technique on this question in order to work out the ratios, so it will give me a sign of a breather, that I can now work out things. I can now think about the ratios. Like you can see, I can work out percentage sales growth, I can work out percentage cost of sales. Okay, I can work out GP margin, as I already mentioned before. I can work out percentage administration costs. I can work out percentage distribution costs. I can work out I can work out percentage operating expenses. I can work out net profit margin. See, so things are automatically now opening up. And yes, this gives a student the idea what to do in the examination. So it's my very simple gift to you people, that question like these when come in the examination, my dear friends, what you have to do is you work out the traditional P&L based measures like GP margin and net profit margin, but along with that, do work out all sort of percentage changes, whether it's of revenue or whether it's of cost. Okay, so I hope this is clear. Now, in this question, we have more detailed information, like we have breakdown of revenue. So revenue has been split into further things. So this means that it is not just sales growth. I will be working out overall, rather than I will also work out the sales growth for different products like household goods, for electronic goods, even for services like cloud computing services and gold membership fees, because we are provided with the revenue breakdown. So I will use that revenue breakdown. Okay, for cost of sales, if we don't want to calculate the breakups, so it's okay, doesn't matter, we'll cover up that through different way. But for revenue, yeah, we need to do it, so we'll do that. So I think I have mentioned that $1 million point, and I've proved my point here, that how actually we are supposed to use. And I'm sure you will remember the two gifts that I'm giving you. So did you like the gifts, everyone? Come on, what's your feedback? Is the session going good? Are you understanding each and every instruction that I'm giving? I'm trying my really best that I cover almost everything in the minimum amount of time. Very few answers I'm getting. I don't know why people don't reply much. It's very difficult to communicate so many things in that limited amount of time. So I also need motivation from you peoples. Okay, so please do motivate me as well. Now, once you are done with the ratio, the next thing that comes is compare. Anything in isolation is of no use. For example, you look in the mirror, and by looking at the mirror, you are saying, oh, how pretty I am, how handsome I am, how handsome I am. So, is this a right thing? Is it a right thing? No, you can't just say yourself that you are very pretty, good, handsome. You need to compare yourself with someone else, because when you compare with someone else, then exactly you get to know how good you are. So you cannot just say good things about yourself in isolation. It is really important that you compare yourself. Same goes for the ratio. You cannot say a ratio itself is good. You need to compare with the comparatives, and the comparatives include the past year information. The comparative includes the industry averages, for example. So you can use these things and compare. Okay, then comes the main part where you are given the marks. This is the part where the marks are awarded to you, and this is what examiner wants to test, and that is how you link with the scenario. How to link with the scenario. You explain the reason, but yes, it's important to link with the scenario. And listen friends, you remember I just told you initially today. Let me just show you again the four things that you have to underline while reading a question. These four things, once you are able to underline these four things correctly, then these will help you to link with the scenario. So these four things will actually help you to link with the scenario, and this is the most important thing. What I believe is that if you underline the right things, then you can link. So linking is key. Okay, I'll tell you the way to compare. once I start with the answer. Okay. Now, operating profit is profit before interest in tax, and gross profit comes before that. Okay. Gross profit comes before that. So from gross profit, when you deduct the non-production expenses, then you get profit before interest in tax. Okay. Francisco, I hope this is clear. Then explanation is the most key thing that I'll make peanuts for you today. And then comes conclusion, on the basis of which we conclude. So $1 million points are clear. I hope. No, Cherry, it's operating profit is not net profit. Listen very carefully. Gross profit comes first. From that gross profit, once you deduct non-production expenses, then you get profit before interest and tax. From profit before interest and tax, which is known as operating profit as well. From that operating profit, once you deduct interest and taxation, then you get net profit. Okay? Then you get net profit. So, are the $1 million points pretty much clear? And if they are, let's not waste our time. So let's start with the ratios. Now, I've done everything for you people. You just have to look at the screen and understand. Just have to look at the screen and understand. I've done everything for you people. Okay, so just look at the screen and understand. And the new slides have been given to you. The new slides have been attached in the webinar section as well. Plus I have already shared the new slides in the WhatsApp group as well, so you already have the answers with you. So just be relaxed, have a cup of tea or a coffee if you can manage, and don't sleep. Yes, don't sleep, and listen the technique I will cover in 20-25 minutes, and will teach you how to link, because this is the area where normally people do not concentrate a lot, and people just rectify certain answers and just try to replicate the answers in the examination scenario, which I personally believe it's wrong. Okay, now let's start. So let's see what ratios are we calculating here. First of all, I can work out the gross profit. Sorry, I think I missed out something. Mm, just wait, just wait. Just give me a minute, okay? Just give me a minute. Yes, and you what you do, you people just think about the ratios that you can work out. I'm giving you 2 minutes for thinking, and in 2 minutes I'm coming back. Just give me 2 minutes, but yes, do work out ratios using the data. The ratios that I mentioned, you just work out very quickly. So I hope you are doing the calculations very quickly, and we are about to start. So I've just given you time for calculations. You can quickly just skim through the workings so that later on I just have to focus on the explanation part. Okay, so we are about to start. Your time is up now for the workings. Now, let's come back to the solution. So first of all, what we can work out is percentage change in revenue. Okay, so you can see percentage in revenue. Along with that, I have also worked out percentage change in household, electronic, cloud computing, and gold membership fee. So if you can see here, everything has been done. Percentage change in revenue is this is overall. So this is overall, which is 15%. No figure for 2005, obviously. This is the current figure. This is the previous year figure divided by previous year. Then we have worked out percentage change in household revenue, which is negative 5.27. Electronic goods revenue change, which is 28.28% positive. Then we have percentage change in cloud computing services, which is wow, 90.18%. And then we have percentage change in gold membership fee, negative 30%. So see what calculations I have done. I've worked out the percentage change in revenue overall, as well as the individual product lines or service lines that the company has. I worked out for that. So current year figure is 2006 minus previous year figure of 2005 and divide by 2005. So I hope the numbers won't matter you, okay? And you can just cross check the workings later on through the presentation as well. Second thing that I've worked out here is gross profit overall. Gross profit overall is what I've worked out. And for that, what I've done is I have this gross profit figure of 40, 129 and 3612. So I've used this gross profit and worked out 4129 divided by the sales. And this is 42% for 2006. And the same I worked out for 2007. So this is gross profit overall that I've done the calculation. Then what I've done, that instead of working out separate percentage change in cost of sales, I have worked out the gross profit for each. Like for example, what I've done is 38990 is the revenue of household. If you deduct the cost, 23394. So once you deduct the cost, so you get what? From the revenue, if you deduct the cost, so you get, can you tell me what we'll get? We'll get the gross profit, and the gross profit is 15596. So I worked out the separate gross profit margins for each household, electronic, cloud computing, and gold membership. So once I divide this with the sales of household only, which is 38990, so I will be getting the answer of 40%. 40%. I'm just showing you a sample working so that you get to know how the calculations have been done. So it's very simple. I worked out the revenue. I have the revenue of a household. I've deducted the what you call cost, and I'll get the GP. And from this GP, I'll divide the GP with the sales, and I'll get 40% as a gross profit for household. And same now you can work out for electronic goods, for cloud computing, and for gold membership. So I hope this is clear. What I need to, it's very simple, Robab Kazmi. It's very simple. I did mention that the sales of household minus the cost of household is equals to gross profit. and gross profit divided by sales will give me the gross profit margin. Okay, Rubab, is this clear? Okay, so I hope this is clear to all of you. So like this, you have to do calculations for all. And now you can see these gross profit margins for household 40% that I just showed you the working, and for the previous year, then for electronic and the previous year, then for cloud computing and for previous year, then for gold membership and for previous year. So I hope this is clear that how I have worked out the individual product or service gross profit margins. So would have, I hope this is clear to all of you who are listening me right now. So the overall gross profit is simple to work out, that I just showed you. This, these are the gross profit figures, and once you divide this gross profit with the sales, so you work out the GP margin for overall. Now, then what I've done is, as I mentioned, that I will work out percentage change for cost. Percentage change in cost. It's good to work out everything in ratio maximum. Okay, so percentage in admin cost, it's very simple. The current figure is 2760, previous is 1720. As we can see from the breakup, 2760, 1720, and this is the percentage change in administration cost. Then what I've done is I've worked out percentage change in customer service cost as well. And customer service cost means that you just look in the note 3 here. So we are provided with this customer cost, and it did mention that administration cost includes the customer service cost, and this is 1900 of the current year. Okay, and 860 of the previous year. And I worked out the percentage change in customer service cost, which is 120%, which is included in this administration cost. Okay, now then we have distribution. I'll tell you the marking scheme. Okay, I'll tell the marking scheme. Then we have distribution expenses. So I worked out that as well. Distribution expense 13,420. Okay, and previous 13,180, and this is the answer. Then we have net profit margins. Simple. Net profit divided by sales, net profit divided by sales. So this is how we have worked out the net profit margin. So this is mainly all financial that I've worked out, because too much of financial information is given in the question. Now this is one non-financial that I have worked out here, is what percent customer complaints as a percentage of customer. Customer complaints as a percentage of customer, and how I worked out this and why I've just worked out this. There are two things that I'm telling you, how and why. Okay, in the area of non-financial, if you see percentage of orders delivered on time are already in percentage, so there's no need to work out then, already in percentage. So it's something that is given in percentage, so don't need to work out. Then you have percentage of late gold member deliveries, that is also in percentage, so I'll use the percentage for my explanation. That's it. Okay, now these are in the absolute numbers. So what I've done is that I've worked out an indicator using both, and that is customer complaints as a percentage of customers. So how will you do the working of that? It's very simple. You see 1400 are the complaints divided by number of customers, divided by number of customers. So 1400 divided by number of customers will give you 19.72%, which means out of the total customers, 19.72 customers lodged the complaint. So the complaint came from 19.72 customers out of the total customers. So what I've done is complaints divided by customers. Okay, so this gives me percentage complaints in relation to customers. So this is a non-financial indicator, okay? Because the rest non-financial performance indicator itself were given in percentage. So I have explained you the basis of calculations, and I've just explained you the method of that as well. So now you stay chill, don't worry. And now I'm moving towards the next part, and that part is where we'll be discussing about the reason. So you remember the $4 million points. First was calculate the ratio that we did, then compare that we'll do, and then explanation where I have to link with the scenario. Okay, you just listen the the way I'm explaining you. Later on I'll tell you how to draft in a word processing sheet, so don't worry about that drafting. Okay, that's very easy. First, just understand this is a very easy to understand method of explanation, but listen that you don't have to make these boxes in your paper. I'll tell you how actually you have to draft in your examination, but right now this method is just to make things very easy for you to understand. So let's start. Let's start, and let me just, yeah. So let's start with the workings. First of all, the first we have is percentage change in revenue, 14.9%, as you can see. So the first we have is percentage change in revenue overall. Now this is the ratio, and obviously I don't have any other percentage comparative available, so I would just say that compared to the last year, compared to the last year I'm comparing with the last year. Compared to the last year, the revenue has changed by 14.99%, which is 15%. So compared to the last year, the revenue changed by 15%. This should be my first sentence in my explanation. I should start my explanation by comparing. You should start your explanation, friends, by comparing first. Okay. So compared to last year, the revenue increased by 15%. Now we have to come towards to the reason. So what the reason is? In order to understand what has happened in the business, it is necessary to consider sales by looking at each of the following different categories. So now this is the overall change in the revenue, and now we are moving towards the breakup to see why the overall sales has increased by 15%. So for that, I'll first start with the household. Percentage change in household revenue. So what happened? Percentage change in household revenue decreased. So let's quickly verify. Yes, it decreased by 5.27%. So household revenue decreased by 5.27%. Now comes the main role is of linking with the scenario. Now comes the main task, and for that what I have done initially, that I did try to underline key things so that I can link with the scenario. So the revenue of the household has gone down. Now, any direct connection do you find from the scenario? Any direct link you find from the scenario? Yes, we do have a link, and let me just use a different color pen now to highlight, or I can highlight here. So now see, how can I link the decrease in the household revenue? It's so simple. It's so simple. See, that is new suppliers were found from another country where labor is very cheap and for many of his household goods. That's it. Done. Finish. That's it. This is a link. You just tell the examiner that the reason for this, the most probable reason, the most possible reason for the decline in the sales of household is that company have started buying from another country for very cheap, and this has affected the quality. That's it. Done. Done and dusted. For household, you need the reason. This is the reason. You just mention in your answer. See, the company changed supplier for many of its household goods during the year, buying them instead from a country where labor was cheap. It may, yeah, this is the word you have to use. Use more words of may, might. Don't just be very confident and say should. No, you don't use word. You don't use word should. You use may. It may be that this has affected the quality of the goods, thus leading to decrease in demand. That's it. This is a direct link. and you will be awarded marks for that. Very simple. Are you understanding, my friends? Come on, give me the feedback. Is this clear to you? Yes or no? This is a very straightforward link that I've done, and that's it. Okay. So are you liking the approach? What's your feedback? So done with this one. Then we have the second one. Percentage change in electronic goods. So it increased by 28% compared to last year. From comparing last year, it increased by 28.2%. Why? Let's find the reason. So the four things that I mentioned initially that I marked out, let's use that. So how can I link? So it's so simple, my friends. See, there has been a worldwide growth in electronic goods market of 20%. Wow, 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 wow. So easy. So easy. So it's oh man, it's so slow right now. It's very slow. That's why you can't see. Okay. So as I mentioned that the question clearly indicates the lines are missing. The line. Thank you, Yasser. Thank you. Relax. Okay, so you can see here, it's a very obvious link in the question that the sales increased for the electronic goods, the sales had increased by 20%. And that became the reason. So simple. This is partly due to the fact that electronic goods market has grown by 20% worldwide. But the company increased the sales by 28%. Market growth is 20%. Company has increased more. So the jungle company has even outperformed this meaning that it has secured a larger segment of the market. So yes, it has outperformed, but this is the direct link, my friends. That's it. That's it. Your examiner will award you marks for that. Why people struggle in this area? This is the core of F5. This is P5. This is APM, which is core of F5, and that I personally love a lot, and you can see right now. So are we done with this? Yes, we are done with this. Now I don't know why the question is appearing like this. I need this information and not getting it in the right way as it should be. Yeah, now it's okay. So let me just rub that wrong statement. Okay, so let me highlight this 20% point. Okay, that's done. Now, second, change in cloud computing services revenue. 90%. Wow, 90% increase in cloud computing business. Let's find any link. Do we have any link? Yeah, we have a link. What's the link? Average growth rates and gross profit margin. So we are concerned with average growth rates. For cloud computing service providers have been 50%. So the market has increased by 50%. The cloud computing market has increased by 50%. If the cloud computing market has increased by 50%, so that is the reason the company has outperformed the market, where the average growth rate is 50, but our increase is by 90, suggesting that the investment in the cloud computing was worthwhile. So this is a direct connection with the scenario. Scenario does mention about the reason. If scenario does mention about the reason, then why you are frustrated, my friends? It's really given loud and clear in the paper what the reason is. So yes, this is the reason. So connection with the scenario, and I'm just giving you a clear link by highlighting things. It's something one cannot one can easily understand. So done with this. Then what next we have? Change in gold membership fee revenue. How bad? This decreased by 30%. This decreased by 30%. Okay, this decreased by 30%. This means the what you say call the gold membership fee revenue decreased by 30%, as I can see in my question, from 2000 it going towards 1400. So this is a decrease. Okay, now the question is why this is decreasing. So let's see, let's make a connection with NFPI. Let's connect with NFPI. You can see percentage of late gold member deliveries in August 31st to 20x5, we were delaying by 2%, but this time we have delayed by 14%. Wow, we have delayed by 14%. So much of late deliveries, so much of late deliveries. And why this has happened? Why this has happened? So it's really simple, my friends. This could be because the company has opened their own delivery system. Own delivery system. See, company has opened their own delivery system, and this own delivery system is the one that is helping the company. So you can see a very obvious link here. Understood, friends? Very obvious link here. Okay. So who says it's difficult? This may be, again, maybe because customers are dissatisfied with the service that they are receiving. The number of late deliveries from for gold members has increased from 2 to 14. This is the quantification. This is what your examiner loves in the paper. The more you quantify, the more you use percentages. This is what your examiner loves. Oh, Mohammed Mursaleen, I already showed you initially. This is a decrease in revenue. Please concentrate. I have really short time. I cannot answer every question. This is a decrease in revenue that I initially told you. Okay. Since Jungle Company began using its own logistic company, and this is a direct link for the decrease. Direct link for the decrease. So you have to link with this scenario. Link with this scenario. I hope this is clear. Okay, friend. Mursaleen, I hope this is clear. So this is a decline in revenue, and the reason is the company started its own fleet of vehicles, and because of that complaints increased because company were delivering it late and customers gone and sales went down. So this is a direct connection that I made here. So I hope this is getting very simple to handle from examination point of view. Guys, are you understanding this easy to understand technique? I didn't make this easy. I'm just giving you the trick here. Okay. Now, the next is percentage gross profit margin overall. Uh, GP increased from 37 to 42. GP increased from 37 to 42. Now, let me give you another trick for all kind of profit margins. I repeat, for all kinds of profit margin, just do just do one first thing. And what is that? Compare percentage change in revenue with percentage change in cost of sales. Percentage change in cost of sales. For all gross profit margins, do the same thing. So let's see. The sales increased by 15%. Okay. And if you need a proof of that, so I can give you the proof of that. See, 15%. The sales increased by 15%. And I have done one more working here. That is, I worked out the percentage in cost of sales. So if you want to know how I will do this calculation, so it's very straightforward and simple. Can you see these two things here? If you can, so let's work out 54 531 minus 51 708 divided by 51 708. So this is a percentage change in cost of sales. Okay, percentage change in cost of sales. So for gross profit margin, the first thing that I would advise you people to do is you do what? You calculate the percentage change in cost of sales, which is 5.46%, and compare that with the sales. So the sales increased by 15%, whereas the cost increased by just 5.46%. So it's simple. The first thing is very simple. The sales increased by a higher percentage of 15%, and cost increased by a lower percentage of 5.46%. And because of that, gross profit margin increased. Wow. Wow. Because of this, gross profit margin increased. Okay. So for all kind of gross profit margins, the first thing that you do is you work out percentage change in cost of sales and compare that with revenue. Automatically you will get to know what has happened. If sales has increased by a higher amount, like here, and cost has increased by a lower amount, so this means that the company's GP margin will increase. Now let's discuss further into detail breakup wise GP margin. So let's see breakup wise GP margin. So it's simple. Let's go back here to our calculations and see. Overall is 42. Now household GP margin increased from 30, it went to 40. Household GP margin increased from 30 to 40. Okay. And electronic GP margin increased from 35 to 36. So the overall increase in gross profit margin was mainly, I'm telling you the breakup, mainly because of that the household GP margin has increased from 30 to 40. This is the major reason. And also the electronic good margin have increased from 35 to 36. So if I see here, the GP margin for electronic increased by 1%, and the margin for household increased by 10%. That is from 30 it went to 40. Now the question is that why GP margin of household has increased significantly? So it's very simple, very simple, very simple. And that is, you can see here, let's highlight again, because of buying cheaper goods from the other country, which is cheaper, which means it provided the opportunity to improve your profits. So you can see here, it's simple. This is therefore largely responsible for increase in overall GP margin. This is because company is sourcing these products from new cheaper supplier. That's why increase the gross profit margin. So this is a direct connection again made and linked with the scenario. So I hope you're understanding all the techniques that I'm telling you. So it's simple, right? Now moving towards the next one is gross profit margin for cloud computing. Now this is strange. The gross profit margin of cloud computing from 75 went down to 65, whereas the gross profit margin of gold membership fee from 95 came to 92. So both are showing a decline. Both are showing a decline. Okay, both are showing a decline. So the two that were increasing were just household and electronic goods. Now decline, why they are declining? So let's quickly see. Gold membership fee constitute a small part of the company's income. 2% decline in the gross profit margin has had a little impact on the overall increase in gross profit margin, because not big eh, big impact this will bring. Cloud computing GP margin has also fallen from 76 to 66. This is so these two actually are the reason for pushing the GP margin on a lower side, and these two are the reasons for the increase in GP margin. Okay, so because of these two, the GP margin has gone down, and because of these two, the GP margin has gone up. Now uh, if you just see here in the scenario, it did mention that the gross profit margin was 80% for the cloud computing. For cloud computing, the average average gross profit margin is 80%. This means the sector, you have to compare with the sector, you can't leave this. Okay, so the cloud computing gross profit margin is 80%, as you can see here, but R has fell down to 66, which means we are 14% below than the market in cloud computing area, where we need to investigate. But if someone says me, okay, tell me why your GP margin has increased from 37 to 42, so I would say because of the household gross profit margin have increased significantly by 10%, and 1% increase in electronic good resulted in the increase in gross profit margin, whereas there are two product lines, one service line and product line, where the GP margin has gone down, that is gold membership and cloud computing. So these two became the reason for the lower side of GP margin, but the first two became the reason for the increase in GP margin. And this is the link that I did and breakup I told you for gross profit margin. Let me tell you that examiner is awarding 8 marks. 8 marks exam is awarding for the entire revenue discussion. 8 marks for entire revenue discussion, and 5 marks will be awarded to you for entire gross profit discussion. So that is why the crucial area were these two. 8 marks from that area of revenue, 5 marks from this area, which means 13 marks out of 20. Wow, 13 marks out of 20 have been done in no time. Okay, so I hope the direct reasons are clear, everyone. Now, the remaining few, let's quickly discuss. Percentage change in administration cost. The remaining 8 for revenue, 5 for gross profit makes 13. So the remaining 7 marks are for these what I'm discussing right now. So let's quickly wind up this. Percentage change in administration costs increased by 60% compared to last year. Why? Why admin cost has increased? Let's find the reason. Yeah, these are marks because of the breakup of revenue and sales, Hamza. Let's find the reason why the administration cost has increased. So it's very simple and easy to link here that admin costs have increased because the service department cost is included in admin expenses, and the service department cost was 860 and now it's 1900, which means the service department cost has increased by a very big percentage that I just worked out here, and that was 120%. The service cost increased by 120%, and service cost is part of administration cost. So it's a direct connection that the service cost has increased by 120%, that is from 860 to 1900. So nothing to be afraid about. The customer service department has increased by 120%. So the question comes, why service department cost has increased by 120%? Why? So it's very simple to justify. The service department cost has increased by 120% because the question says that this department deals with customer complaints. And if this department deals with customer complaints, so just have a look. The customer complaints have gone up compared to number of customers. So you did I did mention that I did work out this ratio, and now I'll use this ratio. So let's see, the ratio is customer complaint as a percentage of customers. Customer complaints as a percentage of customers means that from 4.92%, the complaints have gone up to 19.72%. From 4.92% complaints in 2005 has gone up to 19.72% in 2006. So what you expect then? If your customer complaints has gone up from 4 to 19, that is why the complaints increase, and that is why customer service cost increased. And when the customer service cost increase, so that is increase is by 120%. And because of this, admin cost increase. Wow, it's so simple. You need to link things directly, that the admin cost increased because of the customer service, which is included in this. Customer service increased because of the complaints. As you can see, complaints have gone up from 4.92 to 19.72. This is a non-financial indicator that I'm using here. Non-financial performance indicator I'm using here. Okay, so it's a direct link that I showed you from the question, and in no time we have done that. Okay, friends, loving it or not? So I've used this as well. Now, distribution. Great. Thank you. So now let's see. Percentage change in distribution cost. It increased by 1.82%. Just 1.82%. Just normally what we do, we compare this distribution cost with sales, because distribution is highly connected with sales. The more the sales, the more the distribution cost. The more the sales, the more the distribution cost. So normally, remember, you do compare distribution with sales. Okay, if I do compare, so let's see, sales increased by 15%. Wow. But distribution cost increased by 1.82%. 1.82%. Can't imagine. Distribution cost is connected with sales. If sales is increasing by 15%, how come distribution cost is increasing by just 1.82%? How come? There is something fishy here. There is something fishy here. So yes, it's this is clear that the business is successful in terms of saving cost. But you know why this happened? This happened because company 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 has its own logistic services, and company is delivering itself. Now, because of own delivery, company did save cost. Yeah, I do agree. Because of own service, company did saved lot of cost. But my friends, this saving of cost resulted in non-financial performance indicator. This resulted in that your non-financial performance indicator of delivery on time from 92 went to 74. Pathetic. Because of your own logistics system where you saved lot of cost, but on the other hand, such a saving resulted in a loss of what? Deliveries. Because you lost on deliveries. Now, previously you were delivering 92% on time, but now you're delivering just 74% on time. So friends, but the damage which late deliveries are going to the business cannot be ignored, as seems by percentage of orders delivered on time, which reduced from 92 to 74. I've used this NFPI, non-financial performance indicator. I've used NFPI in my discussion. This may also be, and yes, because of that late delivery, this late delivery may became the reason for the complaints. So as I link this, your complaints that increased a lot, the major reason could be that late delivery part. So I've linked these together as well. I've linked these together as well, and this is superb. What I think is that uh, you did save in cost by having your own fleet of deliveries, but this resulted in that you missed out the deadlines for the deliveries, and this could have increased the complaints. And as you saw, that resulted in increase in administration cost as well. So we can clearly link things with the scenario, and everything that I've done is direct link, and this is what the main secret is behind this area. This is what your examiner wants. This is the expectation of your examiner, which I hope I have covered in a very good way. So this is the link I was talking about. The last is net profit margin. Nothing to comment here much, because this is the last thing. Net profit margin has increased from 19 to 25, and this is good for the company, successful for the company. But the critical issue to resolve is the delivery issue that the company needs to make sure that company needs to handle. Other than that, in my entire answer, I have given you entire explanation by linking with the scenario, linking financials with non-financials, and this is the best part that you need to learn. I hope my this small effort for you people would be worth it. So what's your feedback, guys? After this, we'll take a break. So any good comments? Is the $1 million 4 points good for you people to handle? No, you don't have to present in a tabular form. I'll tell you how to present this. Okay? This is just for your ease. So, thank you. Thank you. Thank you. Thank you. I'll tell you how to practice. Great. I hope you understood my technique. I hope this will do wonders for you. Do give your feedback to ACCA as well. Okay. And do give your feedback to me as well and ACCA as well. Let's take a 5 minute break and we'll join you after 5 minutes. Thank you very much. Okay, so we are back with a break. I'm really sorry. I do give really short breaks because I focus a lot over coverage. So we are done with this question, and I hope you are satisfied with this area. So this $1 million point would have done magic for you, and do remember that this magic will definitely, I hope, will help you in your examination and after that as well. So friends, we are done with this question. I'll provide you the slides of this as well. I have provided, but one slide is missing, so I'll just WhatsApp you on the group. Let's come back to where we were. So having said that, this is one of the areas that was very much neglected, and I've covered that. I hope so this is clear. Now let me quickly just give you a quick overview about building block model. Building block model is another financial non-financial model, and this is a model that is basically used for service industry. So for service industry, we use building block model. For assessing the performance of a service industry, we use building block model. So it says that in every service industry, you should check six things. You should check six things, and those six things are: check the financial performance, again through financial performance indicators. Check the competitiveness of the company. Competitiveness you should check. Again, you can use financial performance indicators, like you can use percentage sales growth or market share. Check the quality. So for that, again, you should have non-financial performance indicators. Check resource utilization, because in a service, resources are very important and their utility is very important. So check that through non-financial performance indicators. Flexibility, check flexibility of the service industry, how fast they are in providing the service, again through non-financial performance indicators. And check the innovation part, how innovative the services are, again mainly through non-financial performance indicators, but you can even use financial indicators as well. So for a service industry, if you need to check the performance of a service industry, there are six things that you should check for a service industry. Further, it says that you should use these financial and non-financial indicators for the service industry, and through these indicators you should check their performance. So it says that in order to ensure that people do achieve these financial and non-financial information, financial non-financial indicators targets, so it says that one needs to set standards for these indicators, for these KPIs. One need to set targets for these KPIs, because if you give them the targets, so people will try to achieve. Like for example, the target is given that you achieve 50% market share. For example, target is achieve 70% sales growth. So it says that you should set targets for these financial and non-financial indicators. But it says that when you are setting targets for these KPIs, so make sure people do take ownership of those targets. Employees should take ownership of those targets. Employee consider those targets as achievable. Employee consider those targets as achievable, and employee should perceived as those targets as fair. Equity means fair, so employees should consider those as fair targets for them. So whatever target you set, it should make sure that people should take ownership of that. They should consider this achievable, and they should consider this as fair. Then the last thing, the building block model says that because service industry is a people oriented industry, so you need to reward people so that they achieve their targets. So for rewarding people, it says that company needs to ensure that the rewards that the company is setting to give the rewards that the company is setting for the employees so that they achieve their targets. So when setting rewards, make sure that it's very much clear. There should be clarity. The rewards should be clear when they will be rewarded. The reward should be a motivating one. It should motivate them. It should be motivating one. Number three, the reward should based on controllable factors. It should based on controllable factors. So when you're rewarding employees, so make sure the rewards are given on clear basis. It should be motivating one for them,
and it should be based on controllable factors. So this is building block model, which is mainly used for assessing the performance of service industry. So I hope this $1,000,000 points have worked things for you. Now I'm moving towards another very important area, and that important area is of okay, I might extend the class today. So do you people want me to extend it and complete this? Do you want maximum coverage? Please tell me. So what do you think? Should I extend the class and ensure that we cover performance measurement in the best way? What you so I can't extend till 12, but yes, I'll try to complete this today maximum, as this will help you to cover things. Okay, so you need to be with me, okay? Otherwise, normally what happens, people just leave and don't bother about taking the classes. Okay, that's good. That's good. Not only 15 minutes, I think I might take 30 minutes more, okay? 30 minutes. Now, we have transfer pricing here, and we have another area of ROI, RI. So first I want to discuss ROI and RI with you people. Now, there are four type of centers. One is a cost center. Cost center is responsible for cost. Revenue center is responsible for maximization of revenue. Profit center is responsible for maximization of profits, and investment center is responsible for maximizing the return on investment, because investment center is a one that is completely responsible for profits, for revenues, and for costs. So in investment center, there is a high amount of decentralization. So in investment center, there is a high amount of decentralization. So investment center is a one that we call as divisions as well. So we normally call investment center as divisions, who are responsible for their own sales, purchase, marketing, finance, and their task is to ensure that their investment center is generating maximum returns. So in order to assess the performance of investment center, we have two measures. One is return on investment, ROI, and second we have residual income. Okay, decentralization means that there is high delegation of authority. Delegation of authority, decentralization. So in order to assess the investment performance, we have ROI and RI. Let's first start with return on investment. So how we work out return on investment is very simple. It's profit before interest and tax divided by investment, PBIT divided by investment, multiplied by 100%. Now, this is basically return on investment, PBIT divided by investment, multiplied by 100%. Okay, then we have another, that is ROI. Sorry, that is RI, and RI is what? RI is profit before interest and tax, and we deduct from this what? Notional charge on capital. From this we deduct notional charge on capital. And how do we work out this notional charge on capital? So the working of notional charge on capital is simple. We use cost of capital and we multiply this with investment. So this is how we work out RI. I'm sure people are now very much aware of how RI is calculated. So it's PBIT minus notional charge on capital, and the rest you can see in the formula. So I'll discuss very quickly what RI indicates and what ROI indicates, and the advantage and drawbacks as well. But I need to move towards a question and see $5 million points for ROI and RI. If you remember these $5 million points, you are done with the entire topic. If you just keep this in mind, remember you are done with the entire topic. Okay, I'll tell you what is notional cost of capital. So if you just remember these five things, your problem is solved. Today is 21st of November. You're very close to your examination. So just remember these five things, okay? So it says that ROI, remember, ROI is better than RI for comparing divisional performance assessment, okay? For comparing divisional performance assessment means when you are comparing one division to another division. So ROI is the best measure. ROI is best. Listen what I'm saying and learn this, what I'm saying. Okay. Whatever I'm saying, just learn this. Everyone, are you listening? What I am saying, just learn this. So ROI is better than RI for comparing divisional performance assessment, which means when you need to compare one division to other, so ROI is best because ROI is a relative measure. Relative measure, which means ROI provides you answer in percentage. So it's a relative measure and it's best. So this is the first concept you need to remember. Second, RI is better than ROI for manager performance assessment as it reduces dysfunctional behavior. Okay, so when it comes to assessing managers performance, now these are two key terms that you need to keep in your mind before your examination. One is divisional performance assessment. Okay, one is divisional performance assessment. Divisional performance assessment means comparing one division to other. So for divisional performance, ROI is best. For assessing managers performance, RI is best because it reduces dysfunctional behavior. Why? Because RI uses cost of capital. What it uses, guys? Tell me. It uses cost of capital. It uses cost of capital, and cost of capital is the best way to check shareholder wealth. What is a cost of capital? What is a cost of capital? Cost of capital means the cost, the minimum return of shareholder. Cost of capital is what? The minimum return of shareholder. So because RI uses cost of capital, which means it considers the minimum return of shareholder, and that is why one says that RI is better for assessing managers performance as it reduces dysfunctional behavior. Okay, clear? So the first 2 points I've just explained. For divisional performance, tell me which is good one. Come on, let's learn very quickly. Tell me for divisional performance, which is good one. Everyone participate. ROI. For major performance, tell me for major performance, which is good one. RI. Yes. Okay. Because RI uses what? Cost of capital, which means RI is better than ROI for assessing shareholders' wealth. RI is better than ROI for shareholder wealth because RI uses what? Cost of capital. Okay. For because that uses cost of capital. So let's compare. For divisional performance, ROI or RI? The answer is RI. For managers performance, ROI or RI? So the answer is RI. For shareholder wealth, for checking shareholder wealth, which is better one? It's RI because RI uses what? Cost of capital. Okay. Now, both are subject to manipulation. You need to keep this in your mind because both uses profit and profit can be manipulated, and both uses investment. So investment can be manipulated. So both are subject to manipulation. Okay. Okay. Rabia, just leave that point. Just leave that for the time being. Last, use controllable figures for managers for both ROI and RI. Which what is controllable? Controllable means what? Use controllable profits and use controllable investments. Okay. So for 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 assessing for managers, when you're calculating ROI and RI, for managers we have to use what? Controllable figures. You have to use controllable profits. You have to use controllable investment. Now what this means? This means all those profits and investments that comes under the control of the manager, under the control of the manager, or I should say all those investments that have been done by the manager should be responsible for that. All those profit that have earned because of the manager decision, so manager should be responsible for that. So for assessing managers, for managers we will use what? Controllable means those that are in the control of the manager. Okay, so remember these $5 million points. Let's quickly revise before I start with the past paper question. Which is better for division, performance comparison? ROI. Which is best for manager performance checking? RI, because it reduces the chances of frauds like dysfunctional behavior. For shareholder value assessment, which is good? RI, because it uses cost of capital. Both are subject to what? Manipulation. Profit can be manipulated, investments can be manipulated. Okay, for managers performance, what figures we have to use of profit and investment? We have to use figures what? Controllable. What guys? Controllable. Okay, now let's move towards another past paper question and see what the question requires us to do. So here we are at another past paper question, and this is another latest exam question on ROI and RA, the most latest question of ROI and RA, and that is sports division. Sports division. Okay, so let's start. Listen, I'll explain you this in a very different way. I'll tell you the examination marking scheme, the examiner comments, and how you can score marks. How you can score easy marks. This is what I'll teach here. I'll teach you how can you score easy marks. This will be my focus here. Okay, so very carefully listen and do understand this, and this will make things really easy for you to grip. Okay, let's quickly skim through the first requirement. Calculate is the verb. ROI for each of the two divisions. Okay, we are required to work out the ROI. So the ROI is the object. Okay, ROI is the object. Clear? So calculate ROI for each of the two divisions for 6 marks. Okay, I'll tell you a marking scheme as well. Now let's go and read the question. Sports company is a large manufacturing company specializing in the manufacture of a wide range of sports clothing and equipment. Okay, the company has two divisions: clothing division that makes clothes and equipment that deals with equipment. Each division operates with little intervention from head office, and divisional managers have autonomy, which means they have the right to make decisions about long-term investments. Okay. Sports company measures performance of its divisions using ROI. This means for divisional performance, they use ROI, and this is what we have learned. Wow, ROI is better than RI for divisional performance. Getting guys? This is the concept. I'm showing you the concept. Okay, calculating calculated using controllable profits and average divisional net assets. Controllable profits and controllable net assets. So I did mention here that for managers, we have to use what? Controllable figures. Wow, this is clear. See, controllable. The target ROI for each division is 18%. This is important. If division meet or exceed this target, divisional managers receive a bonus. Okay, the managers now require a bonus, and manager know that if they achieve 18%, it's a lottery for them. Last year, an investment which was expected to meet target ROI Last year, let me read it again. Last year, an investment which was expected to meet target ROI was rejected by one of the divisional managers. Okay, because it would have reduced the division's overall ROI. Okay, which means the manager rejected an investment. And why they rejected an investment? Because that investment would have reduced the overall ROI. And if the ROI reduces, if the ROI reduces, this means the manager loses the bonus. Okay, now listen. Million dollar point coming up. Manager rejected the investment just because that investment would have reduced the ROI. And if the ROI goes down, that results in a loss of bonus. This means manager always take a short term approach. Are you listening my point? Short term approach. And keeping in mind this short termism, they they will reject all the investment opportunities that results in loss of bonus. Because when you set bonus for the manager would say, okay, bonus, wow, I need this bonus. And to achieve this bonus, they can do all the illegal things. And that illegal thing is dysfunctional behavior. Superb. Superb connection. This is dysfunctional behavior, my friends. Which means when you set bonuses with ROI to achieve ROI, manager will want to do anything that is legal or illegal to achieve the bonus. Yeah, manipulation. Okay, so as the bonus is based on ROIs, listen, guys, what I'm saying. As the bonus is based on ROI, so manager will try to achieve the ROI targets to get bonus. Okay, this means they might reject any good investment. For example, investment in a car, let's suppose. They might reject any good investment that results in a decrease in the ROI. Now listen, I'm telling you a concept here. I'm telling you a very important concept. Are you all listening me? Listen, are you all listening me? Confirm, please. Okay, now listen very carefully. A very important concept coming up. Okay. For example, let me just give you an example which has nothing to do with this scenario right now. For example, the ROI that company needs to maintain is, for example, 15%. Okay. And there is an investment, new investment, I should say, new investment that has a ROI of 12%. Okay. Maybe let me use this space, the above one. There is a division that has a ROI of 15%. And on this, manager are given bonus. Okay. I'm telling you what manager has done in this scenario by using some other figures. I'm just giving you an example. There is a new investment, and that new investment ROI is, let's suppose, 12%. Okay. Manager will think, if I accept this 12% investment So this 12% investment is less than my 15%. Okay. And because of this, my ROI target will not be achieved, as my ROI target is how much? 15%. So if manager opts for this new investment having an ROI of 12%, this will not achieve the target of 15%. Are you getting my point? And if the target of 15% will not be achieved, this will result in what? Loss of bonus. Loss of bonus. Are you getting the point? So this is what manager will check, whether they are getting the bonus or not. So they will reject any investment that ROI is less than the target. Understood? Come on, confirm. Yes or no? Understood? Understood? Okay. Now let's bring a twist in the story. And what's the twist? If for example, if for example, shareholders require a return of just 10%, shareholder requires a return of just 10% on all the investment. Now what do you say? Should this 12% ROI investment, from shareholder perspective, should we accept this or reject this? Come on, tell me. From shareholder perspective, everyone just give me the answer. Should we accept this or reject this? Come on. From shareholder perspective, I am again repeating, from shareholder perspective, this should have been accepted or rejected. Everybody should give the answers. Accepted or rejected from shareholder perspective. So from shareholders perspective, this should have been accepted. Accepted, because its ROI is 12 and shareholder requires how much? 10%. So from shareholders perspective, this should have been accepted. Are you getting my point? So let me summarize here. Understand the situation, how I will make this easy for you to grip in a question. A division ROI is 15. Okay. This is a target to achieve. There is a new investment. Understand this point. There is a new investment and that investment has an ROI of 12. Okay. Manager will reject because not achieving that 15% target, and this will result in loss of bonus. Getting the point? Now, if the shareholder cost of capital, the minimum return required by the shareholder is 10%, is 10%. So if I compare this ROI with 10%, one would say that it is covering the cost. It is covering cost of capital. So should be, what? Accepted. So should be what? Accepted for shareholders. So for shareholders, it should be accepted. Everyone agreed with me? Tell me, this is the important concept. From shareholder perspective, this should be accepted, but the manager would reject because of bonus. Short term thinking. Are you all getting my point? Are you all getting my point? So from shareholder perspective, this should be rejected. Dysfunctional. My friends, this is the best way to compare and take a decision in a quick matter, in a quick way. Just use these three things and take a decision. Look at the target ROI, look at the new investment ROI and look at the cost of capital and decide. From shareholder perspective, this should be accepted. But looking at what manager will do, manager will reject it. Dysfunctional behavior. Dysfunctional behavior. Are you getting my point? So that is why we say, listen, that is why we say RI is better than ROI for manager performance assessment, as it reduces dysfunctional. RI is better than ROI for assessing manager's performance because it reduces dysfunctional. You know why? Because RI uses what? Tell me. RI uses what? RI uses cost of capital. RI uses what? Cost of capital. So you understood the second $1 million point. So for assessing the manager performance, to judge the manager's decision, listen, to judge the manager's decision, it's good to use what? RI. Because RI is close to shareholders as it uses cost of capital. Okay? Whereas Whereas ROI results in manipulation. They will try to achieve the bonus if they are assessed on ROI. So is the $1 million point number 2 clear to all friends? Come on, tell me, is this clear? Okay. And I hope you understood this very quick technique to grip the things. You compare things. You compare things. You compare the division ROI with the new investment ROI and then see the cost of capital. Okay, I hope this is clear. Now, let's come back to the scenario and understand this in. And now we'll get to understand more of the things more clearly. So let's see. The manager rejected one of the divisional managers. Sorry, ROI rejected by one of the division managers because it would have reduced division over ROI. Consequently, sport company is considering introduction of a new measure. See how clear connection will be made. You will understand what it says. New measure known as RI in order to discourage. See what is written. Come on, tell me. In order to discourage what? Dysfunctional behavior. In order to discourage dysfunctional behavior, they've introduced RI. And you know now, you know that RI is better than ROI for manager assessment. Are you okay with me? Like ROI, this would be calculated using controllable profits and average division net assets. So that is okay. We have to use controllable one. Understanding the concept, friends? Now we have a net profit figure here. Notes. Let's see the notes. Cost of capital is 12%. Head office recharges all of its cost to two divisions. These have been included in the fixed cost. This is the fixed cost. And amount to 620 for C and 700 for E. Now, do you think this is controllable? Is this controllable for managers? So this is what? Uncontrollable. Uncontrollable. Okay, this is uncontrollable. And we did saw in $1 million points. We have to use controllable figures for managers. Controllable figures. So this is uncontrollable. Okay, great. Now, included in the fixed costs are depreciation of 165 and 460 in this for C and E. 30% of the depreciation in each division relates to asset controlled but not owned by head office. So 30% of the depreciation relates to assets that are controlled by the head office. So what do you think, this 30% is controllable for manager or uncontrollable? Quickly tell me, controllable or uncontrollable? This is uncontrollable. Yes. Moving forward, Division E invested 2 million in plant and machinery at the beginning of the year, which is included in the net asset figures above. And using reducing balance method to depreciate assets at the beginning of the year, which is included in net assets above figure, and using balancing up. Okay. Division C uses straight line basis and made no significant additions to non-current asset. It is the policy of both divisions to charge a full year depreciation in the year of acquisition. Great. Let's solve. Calculate ROI for each of the two divisions of sports company was 6 marks. I'll tell you the marking scheme. I will tell you a very good examiner feedback, and I'm sure you'll love it. So it's time to solve, right? Now for that I need so I hope that today's class is going good. I wish I could have 4 hours to teach, and I would have made it so clear, uh, all the things. But unfortunately, I don't have 4 hours. I would love to teach you and make things easy for you. Now, part A. What are we supposed to work out is ROI. And that we have to work out for divisions. The name of the divisions are what? C and division E. Okay. For that, you need to request ACCA, C or E. Okay. So, net profit. So, the figures given are what? Net profit. So, let's write the net profit figures of 1455 and 3950. So, are we supposed to add back things here? Yeah. Are we supposed to add back things here? Yes. This head office cost is what I need to add back. Okay. So, how much is that? 620, 700 head office cost. This is not controllable. Anything else? Depreciation 30% is what I need to add back. So how much is the depreciation? It's 165 and 640. 165 into how much percent I need? 30% is uncontrollable, okay? 30%. So 30% is uncontrollable, which makes 49,500 I need to add back. And for the second one, it's 640. It's 640 and add back 30%. So this makes 192. I need to add back here. True? No. I think it's a different amount. It's 460, sorry, pardon, it's 460. And that amount becomes how much? 138. This is a very good question. I'll discuss the entire marking scheme that examiner uses. So it's 460, and that becomes 138. Okay, 138. Now, let's work out the profit controllable, and the controllable profit figure is 2124.5 4788. Okay, yeah, it's useful for long term benefit. So this is controllable. Now let's divide this with the divisional average net assets. So for average, what we are supposed to do: opening plus closing divide by 2. So the figure of closing and opening is given here. So let's use these. 13 plus 9 divided by 2 makes 11,000. And here it's 24 plus 30 divided by 2 makes 27,000. And the answer is 19.3 and 17.7. Now friends, 6 marks. 6 marks. 1 mark for net profit, 1 mark for adding back head office cost, 1 mark for depreciation, 1 mark for controllable profit, 1 mark for average, 1 mark for ROI. These additional assets have been included in the figure. The question did mention that. My friend Yasin, question did mention that it is part of the figures. 6 marks. Now, the best part is that if you skipped this working, for example, you will lose 1 mark, but you will get marks for this, this, even this, this. So examiner says there is own figure rule. You know what is own figure rule? Own figure rule means if you have done mistake here, even though your answer of controllable profit would go wrong, even your answer of ROI would go wrong, but you will be awarded with 1 mark here and here as well. This is own figure rule. OFR. If you forgot to add back this, even these two, if you forgot to add back these two, so you will get 1 mark for net profit, 1 mark for average investment, 1 mark for ROI. Even though your ROIs are wrong, but still you will get mark because you have been deducted 1 mark here and 1 mark here. So this is own figure rule. You have been deducted here, and the impact, even though the impact will be on the final answer, but you will get mark for the correct use of formula. Okay, correct use of formula. No, this is not contribution is not controllable profit because you had to add back certain amounts only. So I hope this is clear. The 6 mark breakup is clear. Let's come to part 2. I want you to find out examinable verb and objects. I'm giving you 1 minute. Come on guys. I'm giving you 1 minute. Read this and tell me how many objects are there. Your time starts now. How many objects are there? Okay. Verb is discuss. Verb. What to discuss? First object, performance of the two divisions. This is first object. Second object, including the main reasons why ROI results differ for each other. Second object. Third object. But before that, one more verb. Explain. This is another verb. What to explain? The impact, the difference in ROI would have on the behavior of measure of worst performing division for 6 marks. So friends, there are two verbs. I'm breaking the requirement. This is what I believe you should do. One is discuss. What to discuss? Two things. Performance and reason. Then another verb is explain. What to explain? Impact. Impact. I will write to the point and see I'll score 6 marks. I can score 6 marks by writing so to the point. Let me show you. Let me show you. Okay. So, part B. Verb, discuss. What to discuss? Object. How many? Two. One, discuss the performance. Second, tell the main reasons. Second, explain. What to explain? Impact on behavior. Okay? Let me just show you how to draft this. Now I'll draft in front of you. First, the first paragraph of your answer will tackle the performance area. So what to write? What to write? What to write? Let's see. 19.3 is the ROI of C. 17.7 is the ROI of E. So what to write? How to discuss the performance? Simple. Compare with target. Simple compare with target. 18% target, 18% target. That's it. That's it. You will be awarded with almost 1.5 to 2 marks out of 6. Out of 6, 1.2, 1.5 to 2 marks will be given for that. What you have to do? I'm just writing in bullets. You have to write in paragraph. Division C. ROI 19%. Above target of 18%. Okay? So C seems better. Division E. ROI 17%. Below target of 18%. Not achieved. So you have to write this in a paragraph form and you will be awarded around 1.5 marks for this. That's it. Discuss the performance. You are discussing the performance. You have discussed the performance. It's done. It's a discussion of the performance. Is this clear? Is this clear? Yes. Now, done with the first part. Then tell the main reasons. Second paragraph. What reasons? Reasons why ROI is different. Why ROI is different. Okay. Let's discuss why ROI is different. Why ROI is different. The ROI of C is 19 and the ROI of this is 17.7. Until and unless you answer each and every object, you will not be awarded with marks. I'm telling you. If you waste time explaining too much of this part, you will just be given 1.5 marks, maximum 2 marks. That's it. Even you explain so good, but you won't get marks. So now, reasons for difference. I'm just writing this in a heading form just for you people, okay? You don't have to write headings. Division E. ROI is low. What is the reason? What is the reason? Very simple. E invested 2 million in plant and machinery at the beginning of the year, which is included. And E uses reducing balance method to depreciate assets. So it's pretty much clear. And that is investment made of 2 million. Investment made of 2 million plus uses reducing balance basis. Now you people tell me, they charge depreciation in the year of acquisition. Year of acquisition they charge. Okay. So because of reducing balance basis, their depreciation charge in the first year will be high or low. High depreciation using reducing balance basis. High depreciation. Yes, which means low profits in first year. Low profits. Pretty much simple. Why ROI is low? Because investment done. Just imagine investment done. Formula is what? ROI formula is profit divided by what? Investment. So profit reduced because of depreciation. Okay. Investment increased because of 2 million. So profit reduced because of depreciation. Investment increased because of 2 million. So your profit went down, your investment increased, your ROI came down. And they use reducing balance basis. And reducing balance basis is the one where the charge in the first year is a high charge. Where charge in the first year is a high charge. Okay? Where charge in the first year is a high charge. Are you getting my point? Understood? Okay. Why division C ROI is more? We are required to tell the reasons, right? So let's have a look. Why? Because because division C made no investment, and they charge depreciation on a straight line basis. Oh, very simple. C made no investments, made no investment, and use straight line method as well, because in straight line depreciation is charged equally, not like reducing balance where the charge is higher in the first year. Simple. That's it. You have to write this in a paragraph, and this will give you around 4 to 4.5 marks. 4 to 4.5 marks. Okay. So second object was what? Discuss the reasons, and I've done that. Performance was checked with targets, and reasons I have linked with a scenario. Simple. Third, third, impact on the behavior. Impact. I'm just writing headings for your ease, okay? Third paragraph, impact on the behavior. Let's see. Impact the difference in ROI could have on the behavior of manager of worst performing division. Now, which division is worst performing here? Which division is worst performing? So, worst performing division is division E. So, what impact will be? It's very simple. Demotivation. Demotivation. Loss of bonus. What the manager of division E will be thinking? He'll be thinking, how stupid I am. I made an investment of 2 million plant and machinery, and he didn't made any investment. Wow. I made the investment for the company betterment, and he didn't make the investment, and he is enjoying the bonus. He is enjoying the bonus, and I lost the bonus, which means from next time I will also not make an investment. Wow. From next time I will also not make the investment. That's it. Friends, are you getting my point? So, what he'll think? What he'll think? Division E made investment for future of business, whereas division C didn't made and got bonus. So this means division E would be saying that in future I will not make the investment. So division E would think no more investment in future, and this will be a loss for the business. This will be a loss for the business. So my friends, your examiner has clearly mentioned that if you will not write on all the elements, you will not get marks. Let me I've shared a very important document as well on the WhatsApp group before the class. Read this document of Read the Marker's Mind. Read this document. It's really useful. Let me show you. And I'm just giving you a confirmation here. I'm giving you a confirmation here that, see what examiners is saying. Examiner is saying very clearly, system is stucking so much. Examiner has said very clearly, okay, now see what it says. You see yourself what it says. It says it is important to identify all elements of requirements. The examiner reported that many candidates who ignored the elements, object, element means objects, okay, spent too long looking at irrelevant or unnecessary comparisons. You have to answer three things. If you will not, you will not get marks. So this is a very good document. I would recommend you should read. Examiner is telling the marking scheme here. Okay. This is the own figure rule I've mentioned. Now, coming back to the question again. Let's have a look. So, did you understood how to gain marks? In a simple way. And this is the technique. So have I answered all the things? Impact discussed. Reasons discussed. Performance comparison done. So I've answered performance, main reasons, and the impact. Simple. Is it easy? Guys, is it easy? So you can get easily 1.5 to 1 mark for this area. Getting the point? Every element, every object has been covered separately. I've answered everything, and then you will be given with 6 marks, otherwise no marks. I break I just broke down the requirement into 3 pieces, answered separately. Now, next part, calculate RI. Calculate RI for each of the 2 divisions and briefly comment on results of their performance. Now, for this brief comment, 1 mark will be given to you. For this brief comment, 1 mark. And then the ROI calculation is to be performed. So 3 marks for calculation and 1 mark for briefly comment. So friends, let's go back to the solution and let's quickly solve for RI. Part C. C and E. RI. Should we take profit controllable? Yes, controllable. And what was that profit? 2124.5, 4788 less notional charge. What is a notional charge? An artificial imaginary charge that we place on the division to see artificial notional charge, to see whether division will be able to cover the shareholders minimum return or not. The imaginary notional charge, to see whether division will cover the shareholder return or not. So this is 11,000 investment, average investment of 27 and 11,000, the same figures I've taken from the above ROI working. So it's 11,000, and what is the cost of capital in the question? It's 12%. It's 12%. 12%. Okay. So this is 1320. And for second, it's 27,000. Minimum return of shareholder is 12%. 3240. If we deduct this imaginary cost, because the question has stated to use average figures, my friend, question has stated. So this is the RI. Now the RI is positive 804.5, 1548. This is positive answer. We need to comment for 1 mark. We are getting 3 marks for calculation, 1 mark for controllable profit. Wow, so great the examiner is. So great the examiner is. He's giving us to use this controllable profit for 1 mark. 1 for notional charge, 1 for ROI. Sorry, RI. So the comment would be what? Both divisions are covering minimum 12% required by shareholders, as answer is positive. So as the answer is positive, both are covering the minimum required return of the shareholder, which means both are covering the minimum returns of shareholder. So from shareholders perspective, the divisions are good. This is the beauty about RI. As RI uses what? Cost of capital. So that is why RI is very near to shareholders. So from shareholders point of view, cost is covered. Getting my point, my friends? Are you all with me? These are the $1,000,000 tips you are getting for free. I hope you are getting my point. Understood? So 3 marks and 1 mark for comment. I hope this is clear. So both the divisions are covering the minimum cost. Now, the last part, explain, is the verb. What to explain? Advantage, drawbacks of using RI. This is the object. Okay, this is the object. Now, 4 marks. This will be an eye opener for you. If you follow my instructions, this will be an eye opener for you. This will be an eye opener for you, and you will be really satisfied. So listen what I'm saying. Listen what I'm saying. Normally, many of our friends ask in the class that can we write in bullets? Okay, let me show you the reality of bullets. We are not supposed to write one sentences. This is one of the students marked script marks. This is one of the students marked script where you can see the student, my friend student, got 1 mark out of 4. And see how the answer was written. This is the original examiner. This is the original script of the student. Okay. See how the answer is written. Those my friends who just want to write in bullets, you are not supposed to write this, because answer like this will be awarded just 1 mark. Now let me explain you how you will get marks. So understand, this is really important to understand. Let's go back to my presentation. Let's take help of the presentation. Presentation, please help. RI advantage. Let's see advantage. It has a better correlation with shareholder value. Do you agree on this? Do you agree on this? It has a better correlation with shareholder value. Do you agree on this? Yes. Because it uses what? Cost of capital. Do you agree on this? Yes. Are you all following me or not? Or you have left? It reduces dysfunctional behavior. Do you agree on this? It reduces dysfunctional behavior, which means for assessing managers' performance, we should use ROI. Agreed? Then it discourages wasteful spending. Why? Because managers know that a notional charge of cost of capital will be applied. A notional charge. They know that their profit, they know that their profit should cover this notional charge. In order for RI to remain positive, in order for RI to remain positive, this notional charge should be covered by the profit. This means managers should not go for wasteful spending. Their profit should not be charged with wasteful spending, because that profit should cover the notional charge. Okay. So when writing advantages, if someone of you wrote like this, for example, if someone of you wrote like this, for example, RI discourages wasteful spending, you will be given marks or not? I'm telling you the marking scheme. No, no marks, no marks for such an answer. No marks. Until and unless you respect the verb. See, like this, no marks. Until and unless you respect the verb. And what was the verb? Do you remember the verb? The verb was explain. So you have to explain. You have to go into the details of that. If you will not go into the details, it's useless, my friends. It's useless. Now, now, your answer should be explaining this in detail. So rather than this, what you should write? You should write RI discourages. I'm showing you one sample. Wasteful spending because, yeah, this because is explanation. Because in RI, notional charge is deducted as a cost for division, so profits should be good enough to cover minimum shareholder cost of capital. If you write this, you won't get marks. If you write this, you will get marks. Even you write two drawbacks, two advantages, you will get marks. This is how you have to write it. Understood, my friends? This webinar will be an eye opener for you. My entire focus on this webinar is towards techniques. So I hope you understood. And I did show you the examiner marking scheme right now. So nobody can challenge me here, because this is the examiner marking scheme. Now, the same way you have to explain about dysfunctional behavior, that ROI reduces dysfunctional behavior as managers will opt for projects that covers cost of capital rather than focusing on what? ROIs. Okay? Explain. Coming toward drawbacks, as I mentioned initially, for comparison between divisions, for comparison between divisions, we do not use RI. RI is not good for using division comparison, because RI is an absolute measure. What? Absolute measure. So RI is not useful for division comparison. Division comparison is done using what? ROI. So we'll say it is an absolute measure, as it does not relates profit with investment, as it does not relates profit with investment like ROI. Because ROI, what ROI does? ROI relates profit with investment. It tells you how much profit you have earned over the investment. RI doesn't do that. RI does not relate profit with investment. So it is not good for comparing divisions, as I mentioned initially. Are you getting the point? Plus, ROI is subject to manipulation, because it uses profits, it uses investments. So company can manipulate profits, can manipulate investments, can manipulate RIs. Friends, through understanding the point, and this is how I've covered the entire topic as well. So this is how you have to explain the things for the marks. Now coming back to my $1,000,000 points, and I just want to clear the screen to revise things with you people, to ensure that everything is clearly understood. So are we clear about ROI is better than RI for divisional performance assessment? Yes, because it's a relative measure. Are we clear about RI is better for managers' performance than ROI? Because it reduces dysfunctional. RI is better than ROI for assessing shareholder wealth, because it focuses on cost of capital. Okay? For 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 managers, we have to use which figure? Controllable. Can you see the screen, everyone? Now, both are subject to manipulation because of profits and investment. Now, how can one manipulate the things? By overstating profits. By overstating profits. And how one can manipulate the investment? By understating the investments. Okay? If you need to improve the results of ROI and RI, so what you can do, overstate profits, increase profits, your ROI and RI both will increase. Or understate investments. Understate investments. If you understate investment, your ROI and RI will increase. Clear, my friends? Is this clear to all of you? So I hope I've made this clear to all of you, and I hope you have learned a lot from the today's session up till now. So $5 million points have been covered for ROI and RI. 4 points were covered for financial, non-financial. 9 points done. Are you happy or not? I did mention that 12 points, if you cover, your performance measurement will be in your grip. Now, what I'm doing, we have covered the 5 points and 4 points. And now, transfer pricing. So what you have to do, $3 million left, right? Now what I'll do is, listen, for transfer pricing, there are $3 million points. When the question states, when the question states that group profits are to be maximized, when the question states that group profits are to be maximized, can you see my screen right now? When the question says that group profits are to be maximized, then you have to use general rule of transfer pricing. What is the general rule? General rule is what? General rule is marginal cost plus opportunity cost. So you have to use general rule when the question states that group profits are to be maximized. Okay? Yeah, I can see myself. I don't know why it's stuck. It's stuck. The screen's stuck right now. I don't know why, but yet stuck. Okay. So when group profits are to be maximized, the question states that group profits are to be maximized. So when group profits are to be maximized, friends, listen, when group profits are to be maximized, you have to use what? General rule. And what is general rule? As I mentioned, General rule is marginal cost plus opportunity cost. Yes, I can see the screen stuck, but don't, no issues. You just remain on the screen. So when we use general rule, we have to consider three things: the seller's perspective, that is the division that is selling to the other division; the seller's perspective, the buyer's perspective, that the division that is purchasing; and then the group's perspective. So these are the $3 million points that when the question states group profit are to be maximized, you have to consider the general rule. You have to use the general rule. For that, you have to understand the general rule. And once you know that you have to use the general rule, you have to see three things: the seller's perspective, the buyer's, and the group's perspective. Now, these are the $3 million points that will make your transfer price life really easy. So, friends, now for this, I will refer you my previous webinar video, a very detailed video on transfer pricing, where I have discussed the $3 million points in very detailed way. So once you are done with that, your 12 points will be done. Your 12 points will be done. So I will tell you which link you have to use. I'll share the link. Yes, it's on Prepare to Pass September videos. I will share the link. And once you are done with that, listen, then I will give you another question video link. And from that video link, you will solve another transfer pricing question to reassess your knowledge. Are you getting my point? Okay, I'll provide you a decision tree link as well. Okay. So for the $3 million points of transfer pricing, you have to watch my previous webinar video and I will share the exact link of that, and your transfer pricing will be done and dusted in the same way as we did financial, non-financial, and ROI, RI. Happy? Now, for that, make sure you are part of the group. If you haven't yet been part of the group, make sure you use this group link and part of the group. And give me your precious feedback about the 12 points for ROI, RI, transfer price, and everything. Friend, I cannot discuss this right now because that would take around 1 hour, 1 hour from here. So I want you people to watch that video. So that would be a 1 hour area that you can cover on your own pace. Now, let's revise before I end. Are you ready for the revision, guys? Let's revise before we end. Come on, tell me. For financial, non-financial, what are the three key things? Sorry, four key things. Number one, from those 12 points, first 4 points, what we'll do? First, what we'll do? We'll calculate what? Ratios. Yes. Then what we'll do? We'll compare with the comparatives, which means with previous year's figures, with industry averages. Then what we'll do? We'll explain the reason. From where we'll find the reasons? Come on. From where we'll find the reasons? Be fast. We'll find the reason from the scenario. So when we read the scenario, four things we need to find out and underline. What are those four things? The first thing is you need to find out the nature of the business. Then any figures and percentages. Then Any important changes? Any important changes? Then information about prices. From that, you will find out the link. And the fourth is to conclude. Done? Perfect. Perfect. Second, for ROI and RI, you give me the answers. Quickly give me the answers. For division performance, we should use ROI or RI? ROI or RI? ROI. For managers performance, ROI or RI? ROI or RI? RI. For shareholders assessment, ROI or RI? RI. For managers performance, controllable profit. Controllable profit. Yes, controllable profit. What do you think? ROI and RA can be manipulated? Yes or no? Can be manipulated? Yes. So these are the 5 points. Now you have to cover the last 3 points. Last 3 points from the video of transfer pricing. Okay? From the video of transfer pricing. So these are 12 points. Remember, I hope you liked the 12 points. Give your quick feedback about the today's session, about these points. Were they easy to understand? Yes or no? Were they easy to understand? Did they made your life easier? Yes or no? What's your feedback? I did ask you to give the feedback at the end of the session. What's your feedback? Come on, guys. What's your feedback? Do give the feedbacks. Yes, guys. So what's your feedback? Session went well? Okay, that's good. So I hope you understood the things. And do give your feedback to ACCA as well, please. And join the WhatsApp group as the link is clearly given here. Admin, please share the link, and the number is also there. If you cannot join through the link, you WhatsApp me, I'll give you the link. Okay, so I hope you like the $1,000,000 points. Thank you very much for your time. Stay blessed. Bye.